Welcome to the HMO Property Show. By investors, for investors. Catch us weekly as we discuss all things cash flow positive property investing. Whether you're a seasoned investor, a new landlord, or just curious about property investing, this is the podcast for you. Sponsored by the Co-Living Collective, your trusted partner in creating vibrant and sustainable shared living experiences. Visit us at colivingcollective.com.au to learn more.
Welcome back to the HMO Property Show. I'm your host, Neil Gibb, and today I've got Mr. Jamie Van Bergel from CBRE back in the booth. Jamie, welcome back.
Thank you very much, Neil. Good to be back.
How was Christmas and New Year, mate? Did you get a break?
I did indeed.
Yep.
I had a beautiful break. 3 weeks. It's a long time ago now, it seems like,
Neil.
But the property market didn't seem to have a break, that's for sure.
It didn't. I did see a dip in sales transactions, however, but them sales transactions that went through were rampant, and we're going to talk about them today, right? But interesting, we always talk about the kind of December dip. It seems like after the Melbourne Cup, things started quieting down a little bit, don't they?
Well, I'm not sure about yourself, Neil, but I'm not looking at too many property websites and looking to change houses and upgrade in the middle of my Christmas holiday. And I think I'm not alone in that regard.
Better things to do.
That's exactly
Better
right.
things to do.
So.
And a lot of real estate agents have a strategy, don't they, that we won't list in December, we'll wait till everybody takes the time off, comes back in January and we'll launch. And I've got the stats here in front of me of property sales. 4 weeks ago in Perth was 404. And then this week, 790. So you can just see the anomaly right there, right?
We often, as a valuing firm, we would tail off in between Christmas and New Year, just in terms of volumes. And, of course, we have sales volumes that we value for, but also refinance. So it's a level of how active people are in the market. And it tails off between Christmas and New Year, and it doesn't ramp up fully until Australia Day. That's our sort of rule of thumb. And this year was probably no different.
So if you're in the property space, just take all of January off, come back after Australia Day.
There are many people that do that. Many people.
Did you go anywhere nice? Did you get
we did, actually. We explored the south coast of WA down to Bremer Bay. Nice. It was amazing.
In a caravan?
We did indeed.
Beautiful.
Yes.
Beautiful, yeah. Jealous. Jealous. Right, mate, let's look at the market as we do our quarterly update. We are a little bit later coming to this one, but we wanted to get the final quarter of 2025 out the way so that we collect all the data and present it to our beautiful listeners. So we'll start with the national property market. Where are we looking nationally?
Nationally, it's interesting. And to be honest, it's probably been a bit over a quarter since we've caught up last time. So I can't particularly remember what we talked about last time, but from memory, I think it's not too dissimilar. The big ones of Melbourne and Sydney, they have recorded very, very minor growth. We're talking under 1%. So they've stabilised somewhat over the past quarter. The highlight, of course, is WA again. And this is quarter on quarter. It's been the story for the 2025-2024. I've got the figures here, 7.6% per the last quarter of 2025, which is, when you compare that to 0.7%, that's a big difference.
Yeah, massive difference.
Yeah.
Huge difference.
We, interestingly, according to certain data sets, we've now surpassed a couple of the other states in our median house price. Adelaide, we've tracked higher than them, and also Melbourne's.
Should we be tracking higher than Adelaide anyway?
Look, is there any Adelaide listeners on this podcast?
If they are, I do not mean to insult them.
No, but we should. Historically, I believe that we have the resources that is a greater potential for increases for employment growth, and therefore that should bump up our prices. And historically it has been the case that we've been higher than Adelaide. Not necessarily historically higher than Melbourne. And interestingly, you asked that. We often get asked, well, weren't we near Sydney at one particular time? And back in the day we were. We tracked very, very similar to Sydney, and then the gap is widened in a greater sense over the past number of years. It maxed out to over $1 million a difference in the median house price, and that was in 2022 between Sydney and Perth. That's reduced somewhat now. We're not over $1 million, but we're still significantly below Sydney.
When I came to this country in 2010, I believe Perth and Sydney were very close, if not on par with each other.
They were. They were between 2000, well, you're spot on, 2006 and 2010, we were tracking very similar to Sydney. I think there was a $50,000 difference in median house price between the two. And then for that $50,000 to grow to in excess of $1 million is crazy. And where should it be? Probably somewhere in the middle.
Which is kind of where we're at now.
No, we're still, there's a gap of around 900,000.
Oh, wow. I thought we were closer. Yeah. Right. So that begs the question, and I think we spoke about this on the last episode that we recorded together. How does Sydney continue to have this difference in median house price when we've got higher wages than them, more affordability? We can borrow more money than them because our properties are cheaper, which means we can pay more for them. So how does this gap continue to be there when we are so cheap and they're so expensive?
That is a very good question. I do believe that we probably have a greater area that we can utilise in WA. The urban sprawl is alive and well, as I'm sure their listeners are aware. So we keep pumping out blocks of land, which in turn does put a damper somewhat on the value. That's my layman's reason for why Sydney, shortage of housing. People do still prefer to live in Sydney to Perth. The high-paying jobs are in Sydney as well. Of course, there are here as well. We have resources, but we also have the FIFO workforce, and it's very similar to compare Perth to Brisbane, for example, in that regard. I've got a similar resource sector. And being a FIFO worker, the only real concern about where you're living is how far away from the airport you are. In Sydney, there's all the big companies in the middle of Sydney, and you'll find that it's just cost prohibitive to buy anywhere near Sydney CBD.
Yeah, super expensive.
Yes.
So what's the problem with Melbourne then? Why have we caught Melbourne up? Because wasn't Melbourne forecasted to outgrow Sydney as well in terms of population growth and become the biggest city in Australia?
To be honest, I haven't read that, to be honest. So I've never heard that they would surpass Sydney. Look, the opinions are out there and everywhere. However, I don't believe it's feasible for Perth to match up or Melbourne to match up with Sydney. The underlying value, and at the end of the day, value is determined by what someone's prepared to pay for it, and people are still prepared to pay $600,000, $700,000, $800,000 more to live in Sydney than they are in Perth. Melbourne has tailed off a bit, and I think what you'll find is there are actually more investors coming back to Melbourne, finding that with costs coming down, the yields are a little bit more attractive to buy investments there. And we are probably losing some of our investors, and we have done over the past 6 months, because Melbourne is becoming more affordable in that regard.
Is it a bad thing that some of the investors are leaving? Is it freeing up some of the stock for the people of Perth?
Anything's good for the first home buyers. At the end of the day, the first home buyers' number one concern is the median house price keeps on going up, and it's very, very difficult for them to enter the market. Still, I'll reference it later in this podcast, that the lower socioeconomic areas, or the entry-level housing in WA, yes, we're not seeing massive growth like we were in 2024, early 2025. However, they have a home open out there, and they will still receive an offer within, a number of days, and there'll be multiple people at that home open. There are people that are sitting and waiting to upgrade in any particular area, and they're not actioning this because they can't find something to buy.
And I'm guessing it's moving in that area because it's affordable, and multiple offers. What we've seen probably in the last 3 months in terms of investors coming on board to work with our company, it's in 95% of them are based in WA.
Okay.
Which has been a massive switch, because historically we've seen a lot of Sydney-based and Melbourne investors, and the Perth investors probably haven't moved due to lack of equity, lack of cash available. But now the market's moved and everybody knows they've got equity available. It's like their investors are waking up now and starting to move.
And especially when you're talking about a product that relies on new housing, WA is the place to be. So the land market is booming.
It's too hot.
It is too hot. Yeah. The estates are selling out so quick. It's
people camping out at the estates again, isn't there?
That reminds me back in 2006, they were doing that. Back then, Byford was the outskirts, and I often reference south of the river. But yeah, Byford was just starting with some new land estates, and camping out was the done thing, and it's just starting again. Interesting you mentioned that, because I was on the tools and doing some valuation work not so long ago.
How was that?
Yeah, it was good fun. I do like to get involved still every now and then. Was tasked with doing a few valuations in a new estate in Cardup. The listeners may have to Google where that is. It's just south of Byford, in between Mundijong, which I've talked about previously in this podcast. And in terms of, Mundijong is an emerging growth area, and Cardup's just north of that. Brand new estate, first one in the suburb with smaller land sizes, and stage one. I went there and did, I think, 11 vacant land valuations. That's what I had on my desk at the time. I had to get walked around by the site supervisor. Earthworks, big machinery was still going on. I had to put my hard hat on. It's a long story. But anyway, I was talking to the site supervisor. Their stage one had about 90 lots. Again, people wouldn't know where Cardup is. And 90 lots, it sold out within 49, all 90 lots.
Be nice to be a land developer now, wouldn't it?
That's exactly what the site supervisor said.
Now, we're hearing, with the kind of connections that we've got in this space, we're hearing that the pipeline of land coming through isn't as healthy as what we needed to be to reach the completions that we need to be, to hit the demand that we need to hit, to take the heat out of the market. So how do we fix the problem? How do we build more houses? Because we've got a supply and demand issue, haven't we? There's so much demand out there, not enough supply. We need to build 25 per year in WA, but we can't build them without the land, right?
And that's a government set target, that 25,000, and it's aspirational, and we have never reached 25,000. So it's all well and good to have a target, but it does not seem to be achievable at this point in time. And to be honest, I don't blame the developers in a way holding off, and I would like to give them enough credit to say that there's enough red tape in the system that I think if they did release more, they would sell more. So they're not scared of that. They're not artificially holding them back. Honestly, they are trying to get them on the market as quickly as they can, as far as I'm aware.
Yeah. I mean, if you're selling 90 lots in 48 hours, you'd have no problem selling 180 in twice as many days, would you?
Correct. And it's not just investors, it's not just first home buyers, it's a mix. So now down in the southern corridor, we've got defence housing who are actively buying up wherever they can.
Yeah, and that's with AUKUS, the submarine project.
Correct.
So add that in to the already undersupplied market, affordability, and that's an affordable area we're talking about, Medina, Kwinana, Rockingham, and then pushing up into the more aspirational areas like Hammond Park and Success and stuff. But that's the areas that they're aggressively buying in now.
Very much so. And they can only afford to buy land at the moment. So, well, not afford, sorry. They can only get land.
Right.
So
because there's no houses to buy.
Correct.
Wow. Okay. What are rents looking at the minute then?
That's a good question. Rents is the only good news story. Well, maybe not for investors, but for people who are looking to rent. That has stayed stable for the last quarter. So the median house rent in Perth was $700 in September quarter, and that has not changed. Okay. What that tells me is that we've reached an have we reached an affordability ceiling? We could have reached an affordability ceiling, or nearing that ceiling. $700 is a lot of money to be living in the outskirts. So, and I do believe that has slowed down over 2025, and for it to have zero growth tells me maybe that's what we're looking at for the year ahead.
I've got the REWA market snapshot in front of me now, which got released yesterday. Same week last year, we had 2,141 properties available for rent. 4 weeks ago, we had 2,178 properties for rent, so the market hasn't really moved in terms of supply coming through. This week, 2,007, so a few less. I mean, we've seen it hover around them numbers traditionally for the last 18 to 24 months. And then we were talking about the vacancy rate, which is being released by REWA versus Domain earlier on.
Yes.
REWA's is saying that it's 2.4%, I believe.
Yes.
But Domain is saying 0.7%.
And I think I've been guilty of this before, referencing a vacancy rate of sub 1%. Because I'm looking at a particular data set, and Domain do have work off different data than REWA does. I do like to use REWA as a general rule, and yes, they state their vacancy rate at 2.7 or 2.6 or something along those lines, and that is nearing actually what they believe to be a balanced rental market. So it doesn't surprise me also on that figures that we're not seeing as much growth as we have in the past.
Like you say, is it an affordability ceiling that we've hit? Are people just balking at the fact of paying more than $700 a week to move house and live somewhere different?
Look, I think that's what we're reading in the paper. It's hard work. Going to the shops and getting the bill at the shops, it's a shock. Getting any kind of bill, getting any kind of work done, prices have gone up. So it does not surprise me in the least that the $700 mark or those people are struggling to make ends meet.
Yep.
And we are reading it in the paper that they are.
People's disposable income are now getting chewed up through the daily hype of living. I've referenced it a few times in the podcast. A coal shop now can easily have a 3 in front of it, right? You could walk away with 3 bags over $300. It's ridiculous, right? I don't mind spending money, but I want to feel like I'm getting value for money. And when I get 3 bags from Coles for $300 plus, I'm not getting value for money there, Jamie.
No, and our wages are not going up. I think you potentially could look at some stats to say over the past 3 to 4 years, yes, they have. However, I'm not sure about you, but my boss hasn't given me a pay increase this past year or the year before. It doesn't work like that. The people out there in the suburbs, they're happy with the job, but they are not necessarily getting a pay increase every single year to match what the cost of living increases have been.
Yeah. Thanks for bringing that up, mate. I'm going to have all of my team queuing up outside my office. Get back to the office. Right, so generally, population growth drives the market, and we've seen huge population growth coming into Western Australia in general, right, since COVID-19, which was 5-6 years ago now. How crazy is that? What's driving the population growth? Because historically, we've got down here, iron ore traditionally drives people to the state, right?
Yep.
But what big iron ore projects have we had in the last 5 years that are bringing this people en masse still?
This is going to be another long answer, if you don't mind, Neil. Because
no rush, mate.
Okay, no worries. We normally point to 3 main factors, drivers for price growth. Population growth is one that you mentioned. We've just talked about vacancy rates. That's another one, and interest rates. Happy for questions on either of those, but with population growth, we are seeing still healthy numbers coming into WA. So interstate growth is on the up. Our overseas growth is still healthy, and obviously you've got natural attrition as well. So population growth in WA is positive. Interest rates is a driver, and I don't really need to explain why that is. It's a very strong driver. Push interest rates up too high, you're going to halt the market. And vacancy rates, again, that's another factor that can fuel supply and demand, investor sentiment, etc. What I normally like to say, and I have done historically on a number of presentations that I've done, is that in WA we're unique. We have a 4th driver, which is iron ore. And I've tracked this. We've tracked this for as long as I've been in the game, and oftentimes the median house price will track very closely to an increase or a decrease in the iron ore. We shouldn't be too surprised by that, because if the iron ore price goes up, that means that there's demand, and therefore that's going to drive population growth. That's going to drive demand, which is going to fuel the median house price to increase. But I was just reading something not yesterday, the day before, on how we are now moving away, in this particular author's opinion, moving away from this boom-bust type of economy here in WA, where we're linked so closely to the iron ore price and market. I give a couple of examples where to back what I've just set up is between 2020, there was no median house price growth pre-COVID. There was nothing. We were stable from 2013 onwards. No surprise, the iron ore price in 2013 was $50 US a tonne. We're sitting at around about $100 now, and we have been for quite some time. Then COVID hit, our prices went through the roof, but guess what? The iron ore price was reached a max of $200 right at that point in time. Again, drove so many people when they could finally come to WA into the state and really pushed our prices up and increased that sentiment. And again, that also drives wage growth. So people have the income to extend themselves more than they did pre the increase. But right now, we're still seeing increases, and yet the iron ore price is sitting at 100 and has done throughout all of 2025. You know, I'm talking approximate numbers, of course. And so that's why this particular author says we're moving away from being tied so closely to iron ore to now being a more mature economy. I'm not sure what I think of it yet. Because we haven't seen a downturn to really prove whether it is linked or not. But I understand why that author has penned that piece.
It's an interesting thought when you think about it, isn't it? But yeah, I think it'd be interesting to track over the next 12 months or 24 months to see the correlation between price growth or no growth against that, the cost of iron ore. Yeah.
Yep.
Now, I know you said in that boom as well, it got up to $200. But what big projects did we have on at the time? We had going back to my old oil and gas days and mining days. I put my old tradie hat on. But we had some big projects there. Gina Reinhardt did the Roy Hill project, and then we had Woodside are doing some oil and gas stuff as well, which isn't traditionally mining. But apart from that, I can't think of any big kind of infrastructure projects up north that have taken the volume of or the workforce that's required for some of the projects that we've seen in 2012, 13 and 14, like Gorgon, Wheatstone, Impex type numbers.
And I think you've hit the nail on the head. When it went up to 213, over $200 a tonne, then that's exactly when all of those were announced. And there's probably no surprise that some of them have tailed off. We haven't seen all of them, and maybe some of them have scaled back. I preface this comment by saying I am certainly no oil and gas expert either, and I don't know what's on Woodside's books. But I do know that the price has stayed stable, which means that potentially there's nothing new right now that's ongoing. So.
Okay. Let's talk about Perth in general, what we're seeing across the Perth metro area. So there's a lot of noise out there at the minute about house prices versus unit prices. And the unit market looks like it's moving pretty aggressively. Is that down to affordability?
Very much so. Yeah. So again, this is a comment that is backed up by stats, and the stats are intriguing to analyse. And again, I really enjoy analysing this data that we get and finding out, the nuggets of gold. And this is one of them. The difference between houses and units jumped to its biggest gap back in early 2024. So we'd already seen that the price growth, the median house price growth, jump dramatically in houses, but it took a while for the units to jump. People didn't jump onto purchasing the units as quickly, and there was a gap of $250,000. That's the base level. So if you think about that was the gap is $250,000 now, but back a couple of years ago it was half that. At the end of the day, the spread historically is normally around $100,000 to $120,000, and that was like that for years. In early 2024, it jumped to $250,000 gap. So that is still a significant gap in my opinion, and it is reducing as the last sort of 3 to 6 months have proven. So the house prices, I think I mentioned that they went up 7.6% through the last quarter. That was a 12% increase for the year of 2025. But the unit house prices, they went up 18%. So that gap is slowly coming back down to potentially where it should be. It was too big a gap.
Do you think this was resistance from Perth locals to go from the house to the unit?
I think it just took people a little while to realise that units hadn't actually jumped as much as houses had. I think people are realising now, and I do believe there's probably still a little bit of growth left in the units, because at the end of the day, in certain markets, housing is becoming less affordable. So what is the next step to get onto the property market is to go to a villa, townhouse or unit.
Interesting when you said the houses went up 12%. It feels a bit meh, doesn't it? After
It
seeing
does.
the 20s that we've had over last year.
It does.
Only 12%.
I know.
It's pretty poor, isn't it? 12% led the nation, right?
It did. It did.
Were we ahead of Brisbane?
We were highest in the country.
Right, okay.
Yes.
Great.
Adelaide was, we also saw some significant increases. However, as I mentioned before, we've now jumped them, so we were higher than them as well.
Yeah, okay. Now, in terms of rental yields for investors that aren't investing in HMO products, someone that's wanting a good, potentially cash flow positive asset, but they don't want HMO, what are the top 10 suburbs? Or give us the top 5 suburbs that we've got right now.
Yeah, so they are primarily, at least 4 out of the list that I'm going to tell you are reasonably affordable areas. And that's not surprised that they're showing a good yield, because the lower the median price in a particular suburb, rents have been growing and growing. That increases the yield. So we've got Cannington, Balga, Midland, Brabham and Nollamara. So 4 of those are very affordable areas to start on your investment journey.
Cannington being one of the ones that isn't. Yeah. So Cannington, we're getting a 5.3% yield. And what are we getting that on? Is this a unit?
No, this is for housing.
For housing, right?
Yes.
So we're paying $700 a week for a house in Cannington. That's going to get us roughly a 5.3% yield.
Correct.
Balga, $670 a week. And now we know that the typical kind of housing stock in that area is your 3x2 villa. So we're paying $670 for something there. That's getting us a 5.3% yield. Midland's an interesting one. We've been buying some stuff in Midland at the kind of mid to back end of the year.
Midland's an interesting area because I'm not sure if you're going to ask me, but in terms of capital growth, there's 2 areas that have the top 5 for the highest amount of capital growth throughout the last 2025. And 2 of them are very close to Midland. One's Vivash and the other one's Woodlands. Yeah. So Midland is an interesting one. It's got a mixture of products, your old dated 3x1s, but you've also got newer 3x2s, villas and some decent housing now that it's flowing through the market. Correct.
Midland also, the train line, the train stations being extended and upgraded as well under the Metronet, I believe.
Yeah, look, interesting because if the train's already there, I understand the story. Would it increase the median price or whatever? But I do think it adds to the amenity of the place. Yeah. So when someone comes in there, they look to the local shops, and this is what I would encourage anyone to do. Before buying or renting at a particular area, what you do is you go for a quick drive down to wherever the local shops are and wherever your nearest public transport facilities are, and get a feel for what that suburb is all about.
Interesting. And Brabham, we're paying $750 a week. They're getting a 5.2% yield. Again, brand new train station there. Some incredible infrastructure and amenity being put there in terms of shopping centres. And then Nollamara, interestingly, $700 a week, getting a 5.2% yield.
And that would definitely tend to be units, or there's no way that that's going to be a house in Nollamara.
Similar to Balga?
I would suggest, it's very similar to Balga.
The old 3x2, 3x1 villa.
Correct.
Okay. So the question that we've got then is supply catching up with demand yet?
I think in the rental it is, yes. I would suggest that.
Is this because of investor activity over the last few years, bringing more product to the market?
There is more stock. So at the end of the day, I think a lot of people like to rent just like they like to live and buy in a brand new house. And a lot of these new land subdivisions that we referenced prior, they're brand new 3x2s, 4x2s. And yes, they take a little longer to get into the city. However, I don't think that's as much of a concern in 2026 as it was in 2020, for example. So whether you're living in Cardup, Mundijong, Two Rocks or in a Midland, I don't think it matters as much as it once did. So with the more stock in these new land estates, that is taking some pressure off the market.
But we can't build fast enough.
We can't build fast enough.
Land sales in Perth top the country with over 11,000 sales. So that's higher than Sydney, Melbourne. That's that's a statistic worth stopping and talking about, isn't it?
So I don't think we like to compare ourselves to Sydney. However, we did top them, but I honestly don't know how much land they would have available. Adelaide's probably a good one for us to compare ourselves to in terms of land. Land in Adelaide last year had only didn't even top 3,000 land sales comparatively to our 11,000. That's a big difference.
That's a massive difference. Huge difference. Do we know why that is? Are they not developing land as fast or aggressively, or don't think they need it like Perth does?
I don't believe they have the area, and I don't know if they have the. To be honest, I'm a Perth boy, Neil. I've always lived in Perth. I'm probably not as well travelled as yourself.
I'm a Perth boy for the last 16 years.
Really? There you go. So, to be honest, I wouldn't be able to say with any level of authority. However, I do know that we have a lot of land available here in WA. When we draw a big circle from Two Rocks to Mandurah, there is lots of vacant rural properties in between that circle, and also half the ocean on the left-hand side of the circle. So, there's so much infill here in WA that is over the next 10 years, we will continue to see probably top the nation in land sales.
Yeah, Nigel Satley's going to have a field day, isn't he? And we've also got there the annual median lot price in Perth was $329.
$329, which shows where they are selling, because $329 is quite affordable, and you would think to yourself, "Oh yeah, I'll snag one for $329." However, the median lot size is $375, so they're quite small, and even in these rural type areas, you're not getting big blocks. I say that, and I'll reference Cardup again. There is a mixture of lots in that new estate, down from 300 square metres, I believe is the lowest one, and they would go for around that 300 mark, actually a bit less even from memory, and they also have 900 square metre lots as their so-called large lots. And they still sell them, and comparatively they are... racking my brains now, but I think they were $580,000 for a block of land, for a 900 square metre block of land in Cardup.
And I'm guessing in terms of the land that's developed, them size blocks will be a small percentage and the rest of
Correct.
Yeah.
Correct. And normally on a through road, they normally, as the entry level to the estate, they like to have impressive homes.
Yeah.
So
yeah. Gotcha.
Quite clever, really.
So at $329,000, I think you've already mentioned it there, we're going to be fringe suburbs, and we're going to be Two Rocks, we're going to be Bullsbrook. Is it Cardup?
Cardup, Whitby, Mundajong. They're probably the outskirts now, and they're the big estates. So Two Rocks, Yanchep, they are booming up in the north.
Right, also fringe stuff. The urban sprawl that we've been talking about. Right, to talk about suburbs in particular in terms of growth per quarter and what we're seeing out there on the ground in terms of areas that people might want to invest in.
Yeah, so growth per quarter, because it was the end of 2025, I actually decided to have a look at what we saw in growth for the whole of the year, just to get a snapshot. Sometimes quarter by quarter can be a little tricky because of certain high sales that are in the area. There's more data to get a nice understanding of what actually happened in 2025. As mentioned, Vive actually topped the increase at 35%. There was another one, Bellevue, at 730. But, sorry, that was the one I referenced before in Midland area. Les Murdy, 1.1 million median price, but that still saw in excess of 20% growth in the year. I think I referenced this last time, but there were only 2 suburbs in the top 10 suburbs for growth that were below the median house price. So the lower socioeconomic areas has not seen the dramatic rises as we saw in 24, early 25.
Right. And this is only in the last quarter of 25 as well.
This is, yes, correct.
Yeah, okay.
Correct.
Because the home buyer scheme was released early by the government, which kind of stimulated that affordable end of the market.
Correct.
And to see only 2 suburbs there that are under the median house price, which is Five Ash and Bellevue, considering that the government have just injected or lit the fuse, I suppose, under an already red hot market, to see the upper end of the market continue to grow there and outperform some of the others is very interesting.
Well, and we've also got oversight over loans, of course, and who's taking the loans. And we are seeing in the last little while a significant uptick for this 5% guarantee that the government is offering in these first home buyers. However, if you look at it across the whole year, we've actually seen minimal growth year on year in terms of the amount of new loans that are being offered to first home buyers. So yes, we saw a short uptick. However, 5%, you still need to be able to afford the 95%. And I don't know if we referenced this on the last podcast, but at the end of the day, affordability will have a significant say in how many people use that scheme.
Yeah, so although the scheme is there to be used, not everybody can service a 95% LVR loan
Correct.
on a $850,000 property.
Correct.
Interesting. And I did see some stats released from REWA the other day as well, because looking at them suburbs that are the strongest growth in that quarter, and you said many of the top performing suburbs were in the upgrader market. Some stats released from REWA the other week saying that there's 220 suburbs in Perth now. 86 of them are now over $1 million median house price. And if we go back 5 years ago, there was only 10 of them. So there's 76 new suburbs in the last 5 years, which have topped the median dollar house price. It's a staggering stat when you think.
It is staggering. Yeah. So that means that that percentage of people here that are listening will be sitting on over $1 million. And I wonder if that plays into the problems we've had with inflation. Now, I'm going a little bit off script here. However, we're seeing such increase in our one nest egg is our homes that I wonder if that breeds that level of confidence to go, I'm still going to Bali. I'm still going to spend my money on overseas travel. I'm still going to buy that new car because guess what? My house has gone up $300,000 in the last 3 years.
I'm a millionaire.
I'm a millionaire. So then that potentially will, and inflation's an important point because the interest rate increases are in direct correlation to try and curtail that. So if we see 2-3 interest rates rises this year, I think there's going to be more and more people struggling and hurting, and then they may look at their home and go, I need to refinance in order to afford my day-to-day living.
Yep. Which leads us nicely into any suburbs which are softening. But before we get into that, the interesting, the government have stimulated the market, then the interest rates have gone up. So the people that they've helped to get into these properties that are probably already stretched in the first place are then essentially going to start defaulting on loans because the RBA have increased the interest rate, so the holding costs have increased. So it's kind of like robbing Peter to pay Paul, isn't it? We're going to give you this stimulus or this grant or this handout to then take it back off you at the top end and then put you into potentially a worse financial position than you were in before we even helped you.
Oh, and you could do the sums and go, since that announcement, we've seen a 5% growth in the suburb that you're looking at. So suddenly you may just have been cost neutral.
Yeah. So in terms of any hot suburbs, and we've seen plenty of hot suburbs over the last 12 to 24 months, any that we're seeing softening at the minute, or is everything still red hot?
Oh, look, I think most areas are seeing good growth. Even the lower socioeconomic areas are still seeing growth, just not seeing as hectic a growth as it once was. I would suggest that if there's any stability in the market, it would be in the prestige side of things, and that can be, which I'm not disappointed about, to be honest, because if you, I think we referenced Five Ash, and I'll reference again, went up 35% over the year. Let's say Cottesloe went up 35% in a year. Well, you're instead of adding a couple of $100,000 on top of the median price, you're adding $1 million, and that's actually what the stats would show. So we're quite glad that Cottesloe is not seeing that same growth. So you're always going to see lower growth in those prestige areas. I think it's saying too much to say that they're slow. They're still interest there for good product.
Always. We always need roofs over our heads, right?
Exactly.
Excuse me. And in terms of the growth that we're seeing in Five Ash, do we know what the drivers were for that? Is there anything specific? Is there jobs opening up specifically in that area? Is there... Yeah, what are the drivers, I suppose?
It's a very small suburb.
Yeah.
And so what you'll find is, I've referenced in a previous time Mendogalup. And people think I'm swearing when I say that word, but it is an actual suburb, Mendogalup, and that showed mid last year to be the highest increased median price in the country, not just in WA, in the country. And no one had ever heard where it was. And I'm not saying no one knows where Vivash is. However, it is quite a small suburb. It's quite a small suburb, and it's in a good location. It is the foothills location. Its proximity to the city is quite good, and for a median price that it says here, the 800,000, I think people are looking at the commute and going, this is the next area that may actually go. When we are purchasing property, I think the number one thing we should be looking at is the fundamentals. How far away from the city is it? What are the amenities like? You referenced, what is the public transport like? People going to want to live here in a downturn. And if they are going to still want to live there in a downturn, then it's a good area to buy in.
Yep, I agree. So that leads us nicely into who are the people that are buying at the minute. Are we still seeing a lot of investor-led activity in the market? Are we seeing owner-occupiers, first home buyers? Like who's out there spending the money?
Look, I do believe that the investors have stabilised. They're not decreasing as such. First home buyers got that sugar hit at the end of last year, and the upgrader market, I think, is a potentially the only area that is growing. The upgrader market, you're always going to have first home buyers. They're going to be a significant portion of new loans, but the upgrader market is an area that I believe people have equity and they want to use that equity to climb the ladder and not stay on the same rung.
Do we have a price bracket that we're classing as the upgrader market?
I actually term it's a really good question, Neil, but I term the upgrader market, it can be in any market. So in any suburb, there is an upgrader market. Right. If I could reference any suburb, but there is a variety of products from your units to your villas to your high-end beautiful properties that either have views, they either have amenity like proximity to the beach, etc. You're going to get people that want to upgrade within their suburb, as well as those that want to upgrade suburbs as well.
Gotcha. So that ripple effect into a more established, more affluent suburb could be anything for anybody. Depends on the person themselves. Correct.
We saw a property down my neck of the woods, just an acre property. So this is very much certainly not first home buyer. It's an acre property in the foothills in the southeast. And this particular property had zero landscaping. It had fencing, fortunately, but it was a brand spanking new house with nothing else on there. A decent sized house, beautiful location, an acre, and it was on the market from $2 million. Again, if you want to reference actual hard and fast evidence, I had a friend that looked at this particular property. There were 2 home opens, and I believe that there were approximately 30 to 40 people that went there, and if it wasn't under offer by the end of the 2 days, it would have been by the end of the week. Yeah, well, and this is a property which still needs $500,000, well, maybe not quite that much, I'm exaggerating a bit, but needs thousands and thousands of dollars to finish it off. So there's money out there that people can upgrade. So that is an example of an upgrader, someone that's made their money on a decent property, maybe have owned their home outright, and then want to get back on with something bigger.
Yeah, great. Good stuff. Infrastructure projects, we know infrastructure can sometimes drive population growth because we need more people to do the projects themselves, which then can drive rental increases, property price increases. Any big infrastructure projects that are finishing off or anything in the pipeline that we should be aware of for Western Australia?
Yeah, I think AUKUS is going to be spoken about for months ahead. This is the major event.
On everybody's lips, isn't it?
100%. And I do reference the southeast a fair bit because I live there, but I also realise that is one of the biggest growth areas that we have. Bullsbrook is another one, and towards the north there's a couple of spots as well that are going to be infill. However, there's so much land down there, and we're just going to, within 5 to 10 years, we're just going to see an influx of properties in that location.
Crazy. I suppose that almost wraps up the podcast, Jamie. What's our kind of outlook for the next quarter? Yes, we're in February now, recording this podcast, but if we were to look another 3 months ahead, where do we think the market's going to be at?
3 months is too early to suggest that there's going to be a change. I've said it many a times. I think it was a year and a half ago I might have said that we might be nearing the top. How wrong was I? We certainly weren't nearing the top. So I'm a little bit gun-shy on saying that we are anywhere near to seeing a decrease. I do think stability, a stable market, lesser amount of growth is on the cards, and especially if we see multiple interest rates. I don't think it's going to be within 3 months. This particular interest rate is not going to affect our median price as much as maybe the government anticipates it might, certainly not in WA. But you put 2 or 3 on the cards, and by the end of the year, I think the sentiment will change, and that's the first thing that needs to change is the sentiment.
So in terms of a 12-month forecast for Perth then?
I do believe that I think we will have something different to say at the end of this particular year, 2026. I think we will be heading into 27. If we're on the back of 2 to 3 interest rate rises, we will be heading into 27 with some level of trepidation, which we have not done for the last, since pre-COVID, 4 years. It's been positive, and I believe it is a positive outlook for the year ahead. Positive for everyone except the first home buyers, I preface, by the way, because that is a struggle street for them and is still anticipated to be for the year ahead.
Okay. And in terms of Perth versus the rest of the country, specifically Sydney, Melbourne, Adelaide and Brisbane, who do we think is going to be the top performer in 2026?
I cannot see there to be anyone other than Perth. Sydney, and again, small increase in the interest rates here in Perth on our median house price is going to be far less effect than it would be for Sydney on a $1.6, $1.8 million property. So loan in excess of $1 million. Average loan is significantly less than Sydney's average loan. So any interest rate rises is going to impact Sydney in far greater.
Especially when we earn more money than them, right?
Correct.
Yeah.
Correct.
So if the interest rates do come out, and we've said there that it could take the heat out of the Perth market, it's also going to take the legs out of the other markets as well. So yes, Perth could be the top performer again in 2026. When do we think Perth would stop becoming the top performer? Is it a 2027 thing? Is it 2028?
To be honest, we are, in my opinion, we are playing catch up. So I don't believe that, I can't foresee a time and a place that the East Coast is going to outperform us and I'd like to reference our discussion at the very beginning, we're still $900,000 difference between us and Sydney. I don't foresee that we're going to grow that much. We are going to stabilise in line with the rest of the country at some point. I'm having a bob both ways, I realise that. However, I just, with the resources sector that we have, the population growth coming into WA, I just don't see, WA is the best place in the world. Simple as that.
I agree, mate. I agree. Yep. Jamie, thank you very much for coming on the podcast again. We're having this conversation. I half the time forget recording a podcast. If it wasn't for these 2 microphones, it'd just be like I'm chatting with a friend.
No, it's great. It's really nice to chat about these things, Neil.
Yeah, and you're going to come back on in the next quarter and we'll do it all again?
Certainly will.
Excellent. Thanks again, mate.
See ya.
Thanks for watching. Make sure you tune in the same time next week so you can stay up to date with all cash flow positive property updates.